Today, we have video from Dunne Insight's Michael Dunne, who's saying a number of very bullish statements about Tesla. First, he says Tesla is still the one EV maker to rule them all. Then in a very shocking follow-up, he also is predicting Tesla will be starting a price war in the US in 2024, just like it did in China last year. This means a lot of pain for everyone else making electric vehicles. What do you think? Is this something that's even possible? We've got Hans Nelson joining us, and we're going to ask him these questions as well as we watch what Michael Dunne's been saying. Welcome, Hans.
Thanks for having me, Herbert.
So Hans has his own YouTube channel. You got to check him out. He does a bunch of interviews and a lot of deep dive kind of reviews of things as well. So follow him on his channel, Hans C. Nelson. So let's take a look at this. First, we've got CNBC interviewing Michael Dunne. And here he's talking about Ford's F-150 production, as they just announced for the second time in 5 weeks that they're going to reduce this production of their F-150. And everybody considers that a sign of slowing EV market when that's not really the case. Well, done from Michael Dunne's research. He says Tesla is still the one EV maker to rule them all. Let's watch a little bit of this and we'll get your reaction to it.
Price cuts led by Tesla that were already started that. And other automakers are terrified because they think, oh my goodness, we've seen this price war play out in China. Here it comes to the United States. And Carlos Tavares, the CEO at Stellantis, has said, look, if we have to match Tesla with these price cuts in the United States, no one's going to make any money on EVs. So they're really in a tough position right now. They see long-term that EVs are still the future, but short-term, they lose money on EVs today. And if this price war really starts to build, they'll lose even more money on each EV. So we've gone from honeymoon to winter. Look for 2024. Some of the players that are currently in the market will not survive. That's a reality.
Michael, I've got to ask you, because, if we're talking about Hertz and selling their cars, how much, and I can remember me and Tanny both spoke to the Hertz CEO when they announced it, and the question I asked him then is what pretty much probably did in their little foray into EVs is that what happens with range. And, you have a situation where the infrastructure, even though it's expanding exponentially, it's just not there if you're going to do what you're going to do with an EV when you rent it, which is take a road trip versus, just driving around your local area, and it's fine to have a Tesla. So how long till that catches up and gets to the point, if you're talking about this vast and wide network of, chargers that work and allowing people to do everything that they need to do on the roads, how long till that gets to a place where you can then justify having demand for all of these EV vehicles everywhere?
Realistically, we're looking at least 3 years, probably 5. Just as you say, for anyone who's driven across the country here in the United States, if you drive an electric vehicle that's not Tesla, the charging experience is abysmal. It's really not good at all. So many of those early adopters went for electrics in the last couple of years, discovered that the charging experience was not great. In fact, it was a source of tremendous stress. So the word spread, and now very pragmatic people are saying, gosh, I don't know if I'll need the hassle factor of electric. I'll wait until that charging infrastructure is up to speed. Then I'll buy electric. Now, the good news on the horizon is most automakers in the United States have now signed up to be compatible with Tesla's supercharging network. So if I buy a non-Tesla starting next year, I probably will be able to plug in at Tesla's supercharging network, which is nationwide and fabulous. But until then, it's like a bridge too far. Why buy an electric today? Let's wait until prices come down, charging gets better, reliability and resale values get better, just not right at the moment.
And that's the thing then. So if we're having to wait, say, let's just call it 3 to 5 years, maybe 3 if we're being, nice to the EV industry as well. How much does that impact Tesla? Because I would imagine that allows potentially any other players to catch up to Tesla. Or is Tesla just should it be viewed in isolation and then the rest are just trying to chase after the scraps?
Tesla's in a world of its own. It commands all kinds of power with regards to its charging network and also its pricing power. So what we saw play out in China last year is that Tesla kicked off a price war, and it really put pain on all of its competitors. That's what non-Tesla automakers feel right now in the United States. Tesla, of course, will have its margins will also deteriorate, but it's nothing compared to what the likes of Volkswagen or Ford or Stellantis are looking at, GM included. my goodness, we're not making money today and we'll make even less tomorrow, but we want to speed up this transition to EVs, but we don't. That's the dilemma that is facing boardrooms across Western automakers today.
Wow. So I really like this clip a lot, and I let it play the whole thing because, they talk about price, and Tesla has a price advantage. What happens when they do even more price cuts? They talked about the supercharger, which is the number 2 reason why people don't want to buy EVs. Tesla has a significant advantage, and it's going to take 2 to 3 years. So where's Tesla going to be in 2 to 3 years for the other EVs to even try to make a play at this? What are your thoughts?
I mean, first question that I had for him was, where was he in 2023? I mean, I thought that Tesla has already kicked off a price war in the United States, and that's one of the things that a lot of these EV manufacturers are feeling, and pressure that the Mach-E is under right now because of the Model Y and the pricing of the Model Y and its eligibility for the IRA tax incentives right now that the Mach-E is not eligible for. Like, all of these things are major hurdles, not only for someone from some place like Stellantis, but also for Ford. And so I don't expect moving forward personally to see continued price cuts from Tesla. In order for that to happen, the interest rates would have to get worse, and um, either that or they would have to just exponentially grow production of the Model Y and 3 platforms, which I'm not particularly expecting either. I think that the next phase of production growth for Tesla is really going to be focused on ramping the Cybertruck and then getting prepped for the next generation vehicle platform, which will be, a huge volume driver. And so I don't see huge upside to the production. I think that the market can really digest Teslas at their current price points. And so, maybe he's just referring to the fact that the current prices of the Model 3 and the Model Y really undercut the value proposition of other EVs. And if that's what he's saying, then I 100% agree that if I was going to buy a new EV today, I wouldn't look at any of the other companies, just because when you look at it dollar for dollar, and I'm a dollar for dollar shopper, you can get a lot more from Tesla than you can get from the other ones. And the charging infrastructure is just even icing on the cake on top of that. The fact that obviously you get access to the NACS and the supercharger network today with the Teslas that you could buy, whereas if you're going to go with an OEM, you've got to wait until 2025 to have access to those chargers. And that really is something that makes those vehicles a lot less practical if you do a lot of traveling. If you're just driving around in your city, then it's really not a big deal. But if you do plan to go any sort of long distances, then having access to NACS is huge. So 100% agree with him there as well. When they talked about the Hertz thing, I think that the issue that Hertz was having really was around the reliability of Teslas as a rental vehicle, and not necessarily reliability, but repair costs. The vehicles themselves are very reliable for drivers who use EVs on a daily basis. But when you have people who are transitioning from driving ICE vehicles, and maybe they're trying an EV for the first time and they don't really know what they're doing, and they tend to actually kind of abuse these vehicles, that's where you can run into some issues. And I think that's why they were having, the what they call reliability issues with these vehicles. And the repair cost, we have to just be honest, are definitely more right now for Teslas than they are for traditional ICE vehicles, because the infrastructure that exists to repair ICE vehicles is obviously built out a lot much, or sorry, that infrastructure is built out a lot further. All of those costs are much cheaper today, and there's a much wider network of people who are able to do that work. So that's something that, yes, the EV market has a little ways to go on repairability and just the overall access that people have to get those service issues resolved when they do crop up, even though they crop up a lot less for EVs than for ICE vehicles. So I think those were a couple huge things. And then on the on the price point, obviously Tesla's in a great position. Those of us who invest in the company understand that Tesla really has an advantage when it comes to cost of goods sold on their vehicles, and that allows them to sell at a much cheaper price and still maintain a profit. That, even as they've cut back on their gross margins and they've increased their volume unit sales, they still haven't gone into the red. They're selling these things at a profit even today. And we haven't even gotten to the next levels of scale yet. And so that's the issue that these other companies are in, is that they haven't figured out how to produce these vehicles profitably. They can't get their cogs down low enough. They haven't been working on putting out enough models to where they really understand what they need to do from a design perspective to build a vehicle that has the type of performance that matches a Tesla, but that they can produce it for a price that they can still make money on at the end of the day. And that really is a challenge. And, the longer that these companies kick the can down the road, I think the less likely they are to be able to make that transition. They're kind of, in the Kodak situation. Kodak will look at GM specifically. So GM actually was one of the pioneers in the EV space with the EV1. And similarly, Kodak invented the digital camera. But what does Kodak do today? Well, it certainly isn't leading in the digital film category. And that's because even though they knew that this was the direction that the technology was moving in the future, they didn't want to cannibalize their existing film business. And it wasn't something that was going to be profitable enough early on in the development of the technology to contribute meaningfully to their financials. And so they just kind of let it sit in a back room. They knew that the future was coming and they didn't know what to do about it or how to execute on that plan. And then in the 90s, Kodak basically went bankrupt and ceased to exist as the company that it had once been, because it's really difficult to incubate a new technology inside of a legacy company that isn't built structurally to be able to profit from a new technology as that technology goes through its S curve of development. And that's the challenge that GM, Stellantis, and Ford really are in, is they know that this is the future, but they have to figure out, how do we move from the present to the future when we've got all of these existing factories, these existing supply chains. We have huge overhead and investments into legacy technology that's not going to be relevant in the future. Our expertise is not in EVs. And while pundits around the world have basically assumed that, of course, these legacy auto companies are going to be able to kick the butts of EV makers in the future because they know how to manufacture things at large scale, the reality on the ground is that that's not how disruption works. And the same reason that Kodak wasn't able to kick the butt of any of the digital camera companies that became huge over the past 20 years is going to be the same reason that legacy car companies are not really going to be able to compete with the likes of Tesla and BYD.
Well, you just dropped quite a number of very good points there. Thank you for that, Hans. The Kodak comment is very well. I really like that because it's the first time I've heard this in a while, and it's articulates it really well, right? Kodak actually invented digital photography. They had the lead. They couldn't figure out how to drop their legacy. They let it go, and it was a mistake, of course, even though they knew that this was the new paradigm. And then this happens, and exactly what's happening. The issue that I want to come back to is the price cuts, because what Michael Dunne is saying, and if he's right about this, that Tesla is going to lead a price war in the US in 2024, just like it did in China 2023. Now, I know you said the price war already happened, but what if Tesla cuts price again? Because of their cost of goods, as you mentioned, this is the year that it's going to start showing up. And then the problem with the legacy makers is they have a lot of EV brands, but they're like 20,000, 30,000 maybe, and only a couple are 200,000. And then those that are 200,000, like the F-150 Lightning, they're actually cutting back and scaling back. The reason I say that number is I've understood that number is the magical number where if you're making 200,000 or more, you're able to take advantage of scale to reduce your cost of goods. And if it's less than that, you're going to continue to lose a ton of money per car. And so, you know what I mean? Like, so 3 years from now, Tesla continues to cut prices. Uh, and, you know, it's like, how do they catch up ever?
Yeah.
Yeah.
I mean, this is the analogy that Stephen Mark Ryan has used for a long time, that basically Tesla is Usain Bolt. They're already out in front of the pack, and they're accelerating and widening the gap between them and these other companies faster, not slower. And that's an example of how that's working. I mean, I would say that it is possible that Tesla could continue to reduce prices on its existing fleet, on the Model Y, the Model 3, potentially the Cybertruck. I do expect that actually to become a lot more affordable over the course of this year. Then you have the S and the X as well. And Tesla is in a position as a company, they've got both the cash balance and the gross profit margin to where they can take a little bit of a hit on price and continue to grow volumes if that is what they decide to do. But regardless of whether or not that's something that they decide to do this year, when they launch the next generation vehicle platform, they absolutely will dramatically reduce their ASP and dramatically increase their total volume of units sold. And that is going to be just a huge driver. I mean, one of the things that we know is that the number of vehicles that are sold below $30,000 a year dramatically exceeds the number of vehicles that are sold above $40,000 uh, new car vehicle price each year. And that's a market that Tesla really has left untapped up until this point. And so, you know, it's 80% roughly, or 75, whatever you want to say. It's much more than 50% of the car market exists for vehicles that Tesla does not yet manufacture. And when they launch the next gen vehicle platform, they will. And they've already been able to achieve these incredible results just by selling large luxury vehicles for the most part. And so that is something that a lot of the market does expect, that they will enter those categories, that they will actually be able to be relatively successful in those categories. So this isn't necessarily something that's going to shock Wall Street. Um, but I think that that is something, as a competitive pressure for the other companies, that actually really accelerates their demise. Because, you know, if you are Toyota, and one of the things that makes you successful today is your ability to sell Camrys and Corollas and these cheap vehicles that are really entry level new car vehicles that other companies have walked away from. As soon as you are actually going head to head with a Tesla that does to your Corolla what the Model 3 did to the BMW 3 Series, man, that's a scary spot. And, you know, we just heard today that Toyota still thinks that in the future that ICE or that EVs are like a max of 30% of the overall vehicle market. And I just don't know what la la land they're living in. I mean, this technology is on an S curve, that it's going to be dramatically cheaper, more reliable, better over the next 10 to 15, maybe even 20 years is what it takes us to really reach all of the different vehicles. But I mean, the writing's on the wall that in 2100, no one's going to sell ICE vehicles at all, except for very niche applications, or, you know, high performance manual transmission vehicles that people want to drive around for fun, just like we still ride horses today. But other than that, I mean, the ICE platform is definitely being phased out.
Yeah, it's crazy, right? Toyota chairman, Aiko Toyoda, just came out, like you said earlier, and he said that battery electric vehicles will be 30%. And then, but he thinks hydrogen fuel, hybrids, and ICE will make up the rest. So we thought that they were heading in the right direction, and now they're still making the wrong kind of statements. Okay, so yeah, great points all around. I appreciate that. You know, the key thing about these ICE makers, these legacy makers, is they need to catch up somehow, and it doesn't look like they're heading in that direction. So. Okay, we'll see what happens. I appreciate that. Michael Dunne is going to be interviewed by Tesla boomer mama, Alexandra. She's going to have a space in the first week of February. And so everybody keep a watch out for that one if you want to join in and listen more from him, because he seems like a great person to listen to. Thank you so much, Hans. I appreciate this. Follow Hans on his YouTube channel at Hans C. Nelson. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.